So, what's capitulation? Capitulation, as the number says, means that when the stock market, when market participants become so demoralized, so fearful, say, well, this is the end of the world, and they dump stocks, even the good ones, and then suddenly the market stages a final deep plunge. Of course, we have to measure it because otherwise it will be subjective, and we are very quantitative in our letters. So, okay. So capitulation measures the percent of divergence between the Dow Industrials, the S&P, and the NYSE. So we take composite and their time-weighted moving average. So we take these three indexes, and for each one, we calculate a moving average, and then we measure the distance between the moving average and our price. So it is like a rubber band. So when the rubber band becomes too stretched, normally it snaps back and tends to come back, tends to meet the moving average. So the moving average is like a rubber band that you have nailed on the wall. It's fixed there. You stretch the moving average, but when it becomes too stretched, the most likely outcome is that it goes back, it snaps back to the original point. So we objectively measure on the Dow Industrials, the S&P, and the NYSE when their respective their price versus their respective moving average is too stretched. And once again, we look for confirmation. Just one stretch moving average is not enough. But when we get two of the three that are too stretched, then it means that the market is already too oversold, and that is likely that is going to happen, that a rebound rally is going to happen. This is not theory, because capitulation has been used also in real life, I think more or less for the last 30 years, and it's been back tested for the last 60 years. So it is not something that we believe is going to work. So it's been really traded under fire. We were very near the bear market bottom in 2020. There was also capitulation in 2011. We called the exact date of the bear market bottom on December 24th, 2008. So it really has an uncanny ability to pinpoint the end of bear markets. And when capitulation hits, then we go 50% long. Not 100%. I know people that are very aggressive that go 100%. I am more conservative. So when I get capitulation, I go 50% long. And what capitulation does is that I also relax the parameters, the criteria to get a full 100% position. So for instance, if under normal conditions I require whatever requirements to be met to go long, when there is capitulation, I relax a little bit those requirements because I know that a bull market is coming. And of course, it's been tested and traded that strong is follow capitulation. This is very important. Okay. So following capitulation, really strong rallies follows. On our website, we have lots of statistics. Some are public, some are for subscribers. Because I can tell you many interesting things, but I think you need data because there are so much misinformation or bullshit or hype. This is a word. There is lots of hype in the financial world. Okay, I can say many things, but we provide the hard and fast data. And furthermore, we need the data to be confident when we have to trade, because we are mortals, we are humans after all, and we are weak. So when the market is falling, for instance, the last instance of capitulation in March 2020, and the market is falling down, COVID, the world is ending, we are locked up at home. And then it takes courage to say, well, this is capitulation. I buy 50%. Now it's very easy. We are here, relaxed. But in real life, when you are under fire, to have the courage to open a 50% position when the world is going under, you need lots of data. And this is why we provide all this data. Some data, a lot of data is public, some is kept for our subscribers. But because I know that in order to follow our signals, we need to have full conviction. And without this conviction, you are never going to buy a falling knife. It's a falling knife, the world is going under. The same happened, for instance, in 2009. I think it was March 23rd, in 2009, we got capitulation. The world was going under. So then it takes courage, and you need data, and you need to understand what we do. Well, I don't know whether you have some questions, but well, more or less, this is the tricks I have in my toolbox, and this is what I do to make a living.
Okay, that's interesting. Yeah, point on not trying to catch the falling knife is definitely an interesting one, and one that is heard all over the place. And yeah, um yeah, I'll just tell people, I'll put all the links in the description. So if you want to reach out to Manuel to see his website, you can find him very easily. And yeah, Manuel, I really want to thank you for taking the time. And if you have anything else you want to add, feel free to do so.
Okay, no, the psychological aspect. During this interview, I show you lots of indicators, charts, goes up, you make money, it works. But I know by experience that the psychological aspect is very important. You have to know yourself. Trade small. Don't go, as one very famous trader said, don't play macho with the markets. So when you begin, trade small. Don't let greed overcome you and say, oh, this is great, this system. Because I've seen many times also with people that follows me that they read the book, they read the website, wow, this is great. And it's great, really, it's great. But there are drawdowns, even though we cut drawdowns by half, but there are drawdowns. And then they trade too big, and then when the first drawdown hits, they become demoralized and they throw in the towel at the worst possible moment.
Yeah.
And so the psychological aspect, control your greed, control also your fear. And I think there are two ways. You can go to a psychologist, but I think there are two shortcuts. You don't need to go to a psychologist. First, trade small. Once you build up confidence in your system, as I have, then you can begin trading bigger, larger. And also, secondly, you have to know the system inside out. You can say, okay, that's great. I'm going to subscribe to the letter. I'm going to read the book, whatever you do. But when the going gets tough, when the challenging market comes, you are most likely to panic if you really don't understand what we do. The good thing is that the Dow Theory is not a black box. We have all the rules are spelled out, so it's there for all to see, of course, but it takes some work. You're not going to be an expert because you read half an hour our rules. But if you do your job little by little, and while you are learning, you trade small, and you follow our advice, and you understand why it's a buy signal, because the rules are there, and you master and you go little by little, there is hope. Furthermore, I finished the way I started the interview. I was a lawyer, and I had no idea, and I was able to become, well, a moderate good trader. So it is doable, it is possible, but you have to begin trading small and really master your trading system. So these are the concluding remarks.
Okay. So thank you again for taking the time. This is it for today. I'm Giacomo. This is also Hub. Reach out to Manuel if you want, and see you next time.
Thanks for having me here. It's been a pleasure, really, and always there.
Okay.
Thank you very much.